Wow, what a few days it's been on the market since the new year, especially with some of the companies I've been following lately. With FUBO TV's 13% gain on Tuesday, is this stock to consider for long-term investors? For those who don't know what FUBO TV does, it's a streaming TV service like Hulu and YouTube TV, but focuses on sports-related content, although they have included traditional TV networks as of late. In this video, I talk about some of the positives and some of the negatives about this company. Hello, you wonderful people out there. My name is Chris, and welcome to the Business Report Show, where I talk about everything business and investing. A few things before I begin. First, I'm not a financial planner or advisor. Everything I discuss on this video is my personal opinion only. Make sure to seek a professional before investing. Now, second, please hit the subscribe button, and if you do enjoy the video afterwards, please hit the like button, as every little bit helps. Lastly, I've put the chapters in my description below for those who want to skip through the various topics I'll be discussing in today's video. All right, let's dive into FUBO TV and its big gains on Tuesday. In the last few weeks, FUBO TV took a bit of a hit in share price. More recently, a couple of announcements drove the stock price lower. The first was the IPO lockup expiry that gave insiders and early investors an opportunity to finally sell their shares after the IPO. The initial offering was at $10 per share, so you can bet some investors were anxious to take some profit, especially investors who may have been invested for the last 5 years. Second, Carsdale Capital had a press release announcing they were shorting the stock as they believed, quote unquote, the valuation was completely unmoored from reality. I've said this before in my other videos. While I'm a long-term investor, my opinion is that in today's world, the valuation metric might be a little overused by many traditional analysts in determining the proper pricing of a stock. Don't get me wrong. It's a metric you should look at when doing your due diligence on a stock. I'm just saying it may not be as significant of a metric as it used to be, especially for these high-growth startups. In any case, these two pieces of news was enough to drive the shares lower, with FUBO closing around $23 as of Monday, January 3rd. On January 4th, the stock had an immediate spike in share price of about 25% during the morning, as FUBO TV sent out a press release stating that they are expecting to exceed previously issued guidance on subscriber numbers. So why would FUBO TV send out this update prior to their official quarterly earnings announcement date slated for some time in February? Well, there are many reasons why a company would choose to come out with a pre-announced guidance update. In general, companies advise investors and analysts of potential surprises ahead of time. This enhances goodwill with the investment community as a whole and may protect the stock against wider swings after an earnings estimate miss. Not only this, by having this update prior to their official Q4 earnings announcement, FUBO fulfills their broad dissemination requirement of Regulation FD, which is the Regulation Fair Disclosure Rule mandated by the SEC. Now, this enables management to provide all investors with the same information. My conclusion is that FUBO TV is getting bombarded with questions from investors after the two press releases that came out about the IPO lockup expiring and the short seller report. I think management made the right decision to make an early guidance adjustment announcement to stem what was potentially a series of continued share price drops on speculative analysts from third parties. As much as we may think management is sticking it to Carsdale Capital, I think this is just an experienced management group wanting to be more transparent and regain some control over their stock commentary. So what are the positives and negatives about FUBO TV for long-term investors? I'll start out with the negative. First off, it's still a young company and therefore still spending a significant amount of capital to shore up their distribution systems and spending on marketing to capture new customers. So I expect to see the continued increase in overall expenses, which will obviously offset revenue. Now, this is normal for any new company and not to be unexpected. You'll notice that in the Q3 financial statements, expenses related to subscribers came in at $61 million, which is still higher than subscription revenues of $53 million. So what's included in subscriber expenses? Well, FUBO states in their financials that these include credit card fees, customer service related expenses, employee compensation, cloud computing costs, and distribution fees and licensing fees paid to the various networks that they stream on their platform. Now, a second negative for FUBO are the competitors like Hulu and YouTube, who have significantly more resources, and if it becomes an all-out marketing war, or if the larger platforms decide to launch all-out sports streaming as well, FUBO TV may fall short. Thirdly, FuboTV is burning through more cash than they are generating revenue. In the 9 months leading up to their Q3 financials, they had used approximately $72 million in cash on operations versus generating $61 million in revenues. This means they need to find cash somewhere to keep funding operations, like borrowing more money, which their current debt levels aren't too high, or they look at issuing more shares, which seems to be management's preferred method. Now, issuing more shares may dilute value for current investors, however, so you do need to watch out a little bit for that. Lastly, FuboTV's primary differentiator is sports entertainment. It seems like live sporting events are returning from stoppage due to the pandemic, but if the mutated COVID strain gets out of hand, or if the sports leagues run into any issues with the spread of the virus, live sports may be cancelled for another season. You just need to look at the UK alone, where this week Prime Minister Boris Johnson announced a full national lockdown. Okay, so what are the positives for FuboTV as a company from a long-term perspective? First off, their positioning as a sports-first streaming service is a good differentiating factor, and them being first to market to do 4K streaming of sporting programs is great. Oftentimes, startups will try to enter a crowded market with very weak, novel marketing schemes just to ride the bandwagon, so to speak, but I definitely don't see that with FuboTV. I do note that during the pandemic, when sports leagues were shut down, they did begin adding more mainstream television stations to their offering, which I think is smart to have a bit of diversification, as the overall market for cable television is dropping as more consumers are cutting the cord with traditional TV. All this, of course, leads to my second point, which is the return of live sports. This is obviously key to the growth if they are to continue adding subscribers every quarter. Despite the negative I mentioned earlier about the pandemic, the NBA and NHL prove that they could still have live sports and protect their players. I think this has now set a precedence for how these major sports leagues can operate safely in the future if another pandemic should hit. Another positive for Fubo is their recent acquisition of Balto Sports. Balto develops tools for users to organize and play fantasy sports games, and it appears as though FuboTV intends to leverage its own proprietary technology with Balto's contest automation software to launch a free-to-play gaming offering. While it is speculated that this acquisition opens up the opportunity for online sports betting for Fubo, I think phase one of their integration is to provide more engaging user experience to differentiate their streaming service to others. Once they've tested this integration and gained some feedback from subscribers, I think phase two opens up to some sports betting revenue generation. The global sports betting market is currently pegged at $85 billion. Even a small fraction of that would add tremendous revenue to Fubo's bottom line. Another positive is the fact that FuboTV's market today is mainly in the US, with only 2% of their subscriber base being international. Now here in Canada, FuboTV is now available and covers our most important sports, hockey, of which more and more hockey lovers are switching to online streaming. Now, while Canada is a tiny little market, I think the larger international markets like Europe and Asia, where sporting and sports betting is massive, is really key to the growth. Finally, I will say an interesting line item in the financials is the ad revenue generated in the first 9 months of 2020. While nowhere near their subscription revenue, it still brought in $7.5 million in revenue, up an estimated 153% from the year before. I think this ad revenue line item will also be a significant driver of growth for the company. My final thoughts on FuboTV is that it should be a good consideration for long-term investors looking to get exposure to the streaming television world and looking for something different to Netflix. There are risks to investing in companies like FuboTV, and due to the early stage of the stock, investors will see continued fluctuations in share prices, but that may not matter so much for long-term investors whose strategy is targeting 3 to 5 years down the road. Most recent example of this fluctuation is the public announcement of short sellers taking positions in the stock. Short positions have increased slightly over the last few months to about 19% of the current stock outstanding. Now, while this may put pressure at times on the stock price, if there is a run-up like we saw on Tuesday, it may require these shorts to cover their positions, which will add positively to the stock's overall momentum. Their adjustment to higher guidance and projections for Q4 is very positive and shows that there is growing momentum and demand for the service. While some have argued that their service price is a little expensive and a little high, it does appear that their key demographic of hardcore sports fans really don't seem to mind that price point. I think FuboTV is a good stock to watch and follow, and look for some dips in the stock price to get in on it. Well, that's it for today's video. Don't forget to hit the subscribe button, and if you enjoyed this video, make sure to hit like. Every little bit helps. As mentioned, everything said here is just my opinion. Always consult a professional before investing, as everyone's situation is different. Also, leave a comment below, as I want to get your take on FUBOTV and if it's a stock you are trading for the long term or the short term. Thanks again for taking the time to watch the Business Report Show. Hope you have a wonderful day. I'll catch you next time.